Test, test. Ooh, okay. Um, so it looks like my audio is off. Can I get some feedback here? Can you guys hear me? Okay. Well, that was a bit of a pain. Again, let's start over. Hate when that happens, really. Um, Thanks for joining me. We did start at 8 a.m. today for a change instead of 8:01 Chicago time. So it is Thursday, the 6th of August. I said a lot in those last couple minutes, trying to speed through the process here to get us into the technicals and to get us out of here. Um, and my headset was set to the wrong input, which is really annoying. In any case, thanks for joining me. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This is episode 1813. Mixed bag today in terms of the overall sentiment. The market has tested higher, but also has tested lower, and it's holding in the middle. We are, with gold being up $20 or 1%, and crude being higher, we have the pound and the bund higher, and so are the bonds. The bonds are up 14 ticks. The 10 years up 5 big ticks. But we also have the Russell, which is up 1.6 points. The NASDAQ up 6 points, was just up 10. And the S&P was unchanged. To me, this looks like a market that is really undecided or mixed in terms of risk allocation this morning. With the initial claims having come out about a half hour ago, initial claims came in better at 1.186 million versus 1.45 million expected. We pretty much wrap up the day on that number. If we have Fed's Kaplan at 10, not expecting very much there, and the balance of trade out of China at 11 p.m. Eastern U.S. time, expecting 41.9 billion. What is on deck in terms of news and macro or the geopolitical picture is the stimulus package. They're going back in to negotiate that. Mitch McConnell, the Senate Majority Leader, the great blocker, so to speak, is said he's willing to accept whatever the White House can work out with the House of Representatives. So he's out of the way, and so there's likely to be something coming out. The market's really being attentive to that. In addition to that, we have non-farm payrolls and unemployment tomorrow morning, so that sets the tone for today's session. Let's pop right in here and look at what was expected yesterday versus what we got. I'm not going to spend much time on this. Yesterday was expecting a test as high as 23 and as low as 06, 05, 06, this area here, and potentially a test of the 3,300 and a half, which is scenario one. Scenario one pretty much played out this morning, just now. The low of the overnight session currently is 3,300 and a half. We did hit 23 almost on the nose yesterday, but neither one of these scenarios really worked out as a combination. If I was to mix these two, that's what basically happened yesterday. So although we tested higher, the market really didn't go anywhere. Again, there's a lot to talk about in terms of structure here. We did have a gap. We left a gap behind that's marked here in my master levels. We left a gap behind, and we were completely balanced yesterday. Very choppy day to trade. In fact, those of you who don't know, much of the gains in the S&P and across the U.S. markets have occurred overnight over the last 5 years or so. So much of the moves happen overnight, and then we end up in this log-jammed kind of trade. And yesterday was no exception. We did push these highs. The NASDAQ made new all-time highs, pushed us high, as 11,144 in the pre-market session or the extended trading hours, and it finished a little lower in the regular session. But again, yesterday, relatively low volume, 824,000 versus 1.1 million on a balanced profile. The value area from yesterday is in play, 3320 to 3316. The point of control at 3318. These are important numbers. Again, highlighted. The point of control is highlighted by the stock zone there. And then the overnight low is right on top of the gap zone fill at 3,300 and a half, which was yesterday's target to the downside. That's the overnight low this morning, which was pegged at about 7 a.m. Central, 8 a.m. Eastern, about an hour ago. And so that's where we stand. Yesterday we had a minor. We did break the IB high, a very relatively small IB compared to the most recent sessions. We broke the IB high, and then we took out the IB low by one tick, and we had what was a classic one tick failed auction, pushed to the other side and came back to the middle. Tough trading. And by the way, when I say tough trading, I want to be clear that I'm not being negative. I'm not being negative to markets. I'm simply stating, from my perspective and time frame, what that looked like. So it's not an excuse for poor trading. It's not being down on the market or anything. The market goes through cycles and phases, and this is just one of them, and we accept that. It is okay. So as yesterday traded sideways, guess what? The Delta traded sideways as well. We finished right above the open, and Delta finished around the zero line. Both price and volume were in congruence there, and that's what we ended up with. Looking at the current session, carrying this forward, let me switch to a 60-minute. This is 240. Looking at the current session, we open back up and we take a ride higher into the next stock zone up. The 28, 29 stock zone is a relatively decent sized one. There's quite a bit of resistance. Used to be support up here in this zone here, 28, 29, and it pushed right into it in the overnight session, got to 29 and a quarter, and rolled over. And what we, rolled over, and what we ended up with here is a relatively balanced, after testing the high, we end up with a relatively balanced profile up to this point, and then we let go and we tested like I said, the 3,300 and a half right here, coinciding with this stock zone. In the bottom of the gap zone, we tested 33 and a half to the tick, and we have climbed since then. So with the initial claims came this pop higher when the market when we got initial claims, the market was trading. The S&P was trading around 3305 and has gone vertical since then, and is getting tangled up in this pretty busy area. If I can show you that 1 second. Let me turn off these notifications. Pretty busy area. My volume scope chart. There's a volume scope. You can see there's quite a bit here left over from yesterday and from today. This is a noisy area. Remember, the S&P is really at unchanged currently. Is unchanged and versus yesterday, and so we are in this cluster of just a lot of noise up here. So that's where we stand. Does it continue higher and push through this all-important 33.18 area? The 33.18 is the most accepted price both days and both sessions, yesterday's session and today's session so far. So if it's not able to get through, you can see that we tested this point of control area essentially from yesterday right here. If we cannot get through here, then down the pole we're likely to go. To me, although the action may be a little deterred by the fact that we have non-farm payrolls tomorrow, today really presents some really nice structure. And I want to talk about that a minute. Again, I don't show this chart very much or very often. This is my stock zone chart. This is the area. This is the chart I pick off the areas that are most important to me for the session. These stock zones are then shared online through the cloud with Convergent members. And what we have here is a profile that was built, a composite profile that was built from the push up on July 12th and is carried through till yesterday. And what we see on this chart, this is really important to understand the narrative. What we see on this chart is we spent quite a bit of time gyrating in this range right in here. We've poked through a couple times, yes, but the range from about 33.71.72, remember that big price, all the way down into the 31.90 and 31.85, remember that price, with a point of control at 32.18, approximately 100 points below, or almost exactly 100 points below where we are now. We gyrated in here and built really beautiful high volume nodes here with the volume. And once we migrated above the 71, you can see us testing the 71, test the 71, break through, pull back to the 71. Look at how beautiful this structure is. We push through and we pull back to the 71, and then we break higher, and then we pull back to the last high right here. Push all the way to the 29 this evening in the overnight session, pull back to the 3,300 and a half right there. And what we have done is we have migrated from low volume node to high volume node. So you can see these 2 days, let me clean this up. These 2 days had the same point of control. Okay. In fact, while I'm here, let me take care of something here. Let's change the point of control to black so that we can actually see it. So these are the points of control in black. You can see these 2 points of control, nice balance, and we break higher. And so that forms this profile here. There's quite a bit of volume in these areas compared to all of the volume down here. The volume is quite concentrated in these little areas. Look at what we've done. We've come up here and just spent yesterday and today, and look at how much we've traded in this area. And so what we have is acceptance, tick, rejection, meh. Acceptance, tick, rejection, meh. Okay? And those become really important areas. So these are called LVNs, low volume nodes, and these are called HVNs, and you guessed it, high volume nodes. And the market's job is to test the extreme, come back to the middle, test the last rejection area, come back to the middle, and we accomplished all of this in today's session in the extended trading hours. We managed to accomplish all of that while we are here in the U.S. While we're here in the U.S. Sleeping. So we managed to find an extreme, come back into balance, test the low volume node, come back into balance. Okay. And so that's where we are today. Once we give up the 3,300, guess what? We're looking now for, once we give that up, we're looking for 3288, push back up to the low volume node. If it's not, and this is an if then kind of deal, if it cannot hold above the 3,300, then it's likely to come back to the point of control and it's likely to test the 71. So if we see that it's pushing into, it gets below the 3,300, it's pushing into the 3,300, and it's not able to hold above the 3,300, and that's very hard to detect. Now, trust me, I know that that's easier said than done. That's easier said than done in terms of the ability to see it in real time. But once it fails below 3,300, look to get in short somewhere between 3,300 and 3,290. Look for a test of the point of control, and then look for 71, the most likely test area below, and then back. If it rejects the 71, then you're looking for 89. So it's kind of like a seesaw because we have an incredibly well-defined structure here, and this gets me excited because to me these are clear opportunities. Is something wrong with the sound? Let me check. Test. Is the sound still bad, or just tell me if something's wrong with the sound. Anyway, so this is really important, by the way. This is the most important part of what I'm discussing today are these structures and the fact that the market has left some weak structures beneath us. And so as we start to roll over, these are big money plays, in my opinion, when the market has left these weaker structures below us. Really important, because if you just step out of the tick drama, out of your order flow, out of your dome, out of your heat map, and look back at this chart, you'll see that once it starts to fail, you've got opportunities to hold on with well-defined risk, opportunities to hold on for big gains. These are the kinds of structures that make the month. Okay, so we are in this today, and we have non-farm payroll tomorrow. Again, this is all predicated on how we are trading these kind of um, protruding high volume node zones. And for anybody else that's looking at bar charts, they can see this. They can see the 71. Okay, support, resistance, and all that. But we can see what's happening in between these bars. We can see that there's something right there. We can see where the market had acceptance. How do you find acceptance on a bar chart without looking at, hey, there's a cluster here, but we can see the volume and where that is, and that's the edge in organizing the data using volume profiles. Now, sorry, this is going long, I know. Here's what's happened overnight. We tested up, pulled back. We've tested up again into that. Remember yesterday I mentioned that 3330 area having quite a bit of volume. We did end up pushing into it in the overnight session. We held at 29 and a quarter, and we have sold off. That volume stayed solid. Above there, 3940, and below us, we hit this solid area here at 3,300. We front ran at 3,300 and a half, but relatively solid, and then that pushes us into the 3,290. You recall the 3,290 is the next big protruding balance area. There's the 3,290, right? It's this. And we have, so we can compare it, we have liquidity in this area. You better believe that I'm going to be active and monitoring if it gets down here. So this morning it has tested these structures, the structure that's been created, and it's holding steady at the high volume node created yesterday. And what has it done overnight? It has built another high volume node on top of that. So very important to watch carefully this morning to see what's going on and how the market responds. Look, I cannot predict how the market's going to respond, but what I can do is, just like a good military commander or general planning a battle, just one battle in a continuous and infinite war, it kind of not a very positive way of looking at the market, but as a general, I know that I can't predict what the enemy can do or the other side can do. Not that anybody here is an enemy, but I can certainly be prepared to make my move once they do. This is how I respond to everything. I can't control what others do, but I'm prepared with how I'm going to respond to it. And the same kind of skill set is used in trading, or actually, I learned it from trading, that I apply to life in general. If I cannot control it, I don't really spend much time thinking about it or worrying about it. So here we are. We are opening right here. Okay. You could see some pretty decent buy prints coming in just now. It's been a battle in here. You could see the selling. The orange is selling. The colored ones are 100 lots or better. This is a consolidated tape time and sales. Tape here. Important for me to watch. So you can see there's a battle going on here, and what it has done is it has rejected this point of control, this multi-day point of control yesterday and today, and it's pulling back. This morning, what am I looking for? Because the overnight inventory is mixed, I'm not expecting an edge on the open. I'm looking for an open auction that actually pushes higher because the overall trend is to the positive side. The way we are is that the way we've held is that we've been one-time framing up, and then yesterday's one-time framing ends. The daily one-time framing ends at 11 and a quarter, which is just beneath us. I mean, we're currently trading at 13. I'm looking for a test higher. I'm looking for that to fail. I'm looking for the market to roll over and do what I expected yesterday, or what I had planned for yesterday, and to quickly accelerate down into the 3306 and then retest this 3300 and a half, and then eventually break through it. Now, this is hard to determine because we do have a major release coming in tomorrow. Non-farm payroll has not been so impressive in the last, probably 3-4 years, but the market's paying particular attention to it now because of the pandemic and the 42 to 45 million jobs lost as a result. So the market's paying very particular attention there to that figure. That's our primary. The secondary is it doesn't hold on to these prices and immediately breaks the one-time framing up or the low at 11 from yesterday, and then consolidates at the center point of that, which is the center point of the gap, which is, again, 330506. Consolidates in here, and then comes back in, and then goes back into balance, consolidates here, and it's a sleepy afternoon into non-farm payroll for tomorrow. But the better opportunity is for the test higher, the clean auction, and there's a lot of structure that's weak below, in my opinion. The clean auction is to squeeze higher, unable, and push lower, but what it's done lately is to test down and then continue higher, and I continue to anticipate that it's likely to give up to the short side, but it has not breached anything that tells me that the bulls are done. And one of the first things it needs to breach, or I expect it to breach, is the one-time framing up. Once it breaks the one-time framing up, there's a better opportunity at structured shorts, and then when we get into structured shorts, we're looking for that 3,300 to break. That is that low volume note. Wow, I covered a lot. I'm sorry this is so long. Good luck today, and I'll catch you tomorrow. Hopefully you're picking this up. Understanding the auction is really important for your career development, in my opinion. Good luck.